Hello fellow traders. Today I'm going to give you a little bit of an update of what's been going on. I've been a little bit busy, and when I haven't been busy I've been catching a little bit of a nap. But I wanted to give you an update on the accounts and try to continue with the series. If you're new to the channel, please make sure to subscribe. I appreciate all the subscribers that have been with me since the beginning and those that have come along the way. And also leave a thumbs up on the video if you find it useful or like it. But this is going to be a continuation of our trade series of where we had the Euro USD on one pair. And I had it between a couple of accounts, but I've done a little bit of an adjustment just based on the presidential election results and what I'm thinking might be happening. But for now, in the MT4 account, we're looking at being fully hedged. I just decided to go ahead and fully hedge out because of the US dollar getting much stronger. We were just kind of floating it around. We did finally get back up a little bit, but then the election results started coming in, and that was the end of that. So once we finally broke, I was a little bit beyond the limit at this point, and we just couldn't wait anymore. So I went ahead and hedged that up. And now, based on the presidential results, I put on a 0.05 additional short. So now we're basically looking at just having a 0.05 lot short, with the other 0.3 long being hedged out by this 0.3 short. Now in this situation, this is considered our failsafe for our account. So this is basically, instead of taking the loss like I did in one of the other accounts, which I'll go over in just a few minutes, we're going to stop the downside of it, and now we're going to try to take small pieces of this and actually work it out. Now we have 863 that we have left to work with in our account balance, so we're at about half drawdown at this point. Let me turn the phone for a second to show that. And then but we're going to try to stay under 500 to work this out. And when we're in a position like this where we're kind of fully maxed out, we're hedged, went beyond our limit, and I'm thinking we're going to go farther than the 350 that we planned from the beginning, we're going to have to try to work this out and get out of this without exposing ourselves to a huge amount of risk at one time. So that's kind of what the purpose of the Achilles heel strategy is. So from this point, what I've done is, even if we did not have this 0.05 here, we would ultimately wait for price to continue and settle out, or maybe a potential place for it to reverse, and we would want to actually close only part of this position. I've added a little bit more just because of the news and because I'm expecting a much lower target by the end of the year. So basically the plan for this is I will close out the 0.05 in profit whenever I see some kind of indication that we may be holding a good level, and I will close out 0.05 of this hedged position here on the sell side, and that will basically give me 0.05 to the long side to come back. And I may even close a little bit more and try to come back to the long side some. And at that point we would be left with a couple of options. We could either trim up one of these lower positions for our 0.1 and reduce our size, or we could try to squeeze this out and ultimately get a tighter hedge structure position. Ultimately though, the main focus is reduce our size in the market. So we either want to try to close out and squeeze and then maybe trim out, or even just rehedge again. But the ultimate idea is kind of like algebra. So if we want to go long in this situation, we have to close out a short instead of adding another long. I've gone ahead and added the other little short, which would be something you could really do if you were in the middle here. So what's going to actually happen if this goes wrong against us, I'm going to actually have a 0.05 long here, and that's going to be working for our favor towards working out some of the long side to get rid of some of the short. but ultimately I'm still thinking we're coming down here around 104 to 102 possibly by the end of the year. So we're going to be heading very strongly to the top side on the US dollar. Bonds, Bitcoin, futures, like everything has basically shot through the roof. Our economy is looking like it's going to turn around. We've got an interest rate decision where they're looking to raise it 25 basis points here forecasted, but we shall definitely see what happens, what the Fed decides, and that's going to ultimately make more moves. Then we have end of the year spending, holidays, so on and so forth to make the US dollar stronger. So I ultimately think there's a very strong reason to believe it's going short. So I've gone ahead and kind of did a little bit of an overload to the short side to try to make a little bit of extra back without just being stuck, without doing anything and waiting. So now that's going to kind of wrap up what we can do with this right now. It's just a matter of waiting and see. But we have an A or B option, and that's about all we can do at this point. And we're eventually going to work our way out of this one way or another, because if you followed any of the hedging series or looked at the basics of hedging 101, the core concepts, a lot of this will make a lot more sense after seeing those videos if you haven't. And we're just going to basically use that as our tool to try to work out this in smaller pieces by reducing our position size and probably making a little bit here and there on the way. So now that we've kind of talked about that, we're kind of stuck with that at the moment with all we can do. Let's go ahead and take a look at what I've got planned coming up for the next couple of days. So right now, I've kind of taken the loss on the Euro USD for what I had in the other account that I was running, and I'm only going to have funds and trade in this one account now. But what I've basically been working on over the last few weeks is adding in this all these different positions. And let me just sort this so it's easier to follow and look at. So I've just been adding in slowly one position here, one position there, a few positions here, a few positions there. And what I'm ultimately trying to do is the same mechanics of what we're doing, of what I just showed you and what the series is about. But I'm spreading that across multiple pairs. So now we're also taking advantage of cross pair correlation, 2-pair, 3-pair correlation, 3-pair hedging. And ultimately what's going to happen with this now, and it's kind of been going as expected so far, some of these trades have all of these trades have targets, none have stop losses. So either they're going to take the target and we're going to go back to another pair and reinvest that, or in a case of where we're starting to mature to now, if you'll notice, some of these pairs have some pretty steep drawdowns. So like the Euro AUD, it's the same concept. I'm going to let it get a little bit of space. Maybe it's at a logical level, and I'm going to try to add in from there. So now it looks like we're going to continue breaking down and coming even lower. Maybe the Euro is getting stronger. Or no, the AUD is actually getting stronger. The Euro is kind of holding steady there. But we'll see if this makes a trend line and pops back up. If not, it'll come down here, and I'll let it get plenty of space before I add in again. It's going to have to get much, much lower. And the reason being is I have small positions in each pair. And the ultimate idea is to not load our entire account into one pair. So this way we don't have that steep drawdown, and even still we don't have a situation where we just have to completely cut a position. So we can allow it to actually float as long as necessary. And on this, once I've added in, instead of having just a normal target on, say for example, let's find one that I'm in. So like a single position with a normal target, if it reaches and closes, great. If not, then in this case I will look to add in, and kind of like what I had just shown on the Euro AUD. Once I've added in again, I'm going to bring that target down with me. So it's eventually going to either close and both of these are going to make a slight bit, or I'm going to end up adding in down here once it gets much lower, and I'm going to bring that target down below that first position, but I'm going to still bring it to a logical area. Now, anytime I'm picking a target, I'm going to be looking for a logical area to try to hit that target. And I'm not going to look for extreme amounts. I'm only looking for about 1 to 3% per trade. Some of these I've got to go through and adjust as the account grows, because I will be looking for just a little bit more to match out with the new balance. So I'm going to go through and adjust a few of these, but that's all we're trying to do, is keep our targets in a fairly logical place. We could probably even go just a little bit more with that, because I see that pin bar. So we're going to add a little bit more to that target. But we're looking for between about 1 to 3% for each target. We're about to reach that one. That was an older one, but I'm going to leave that alone because that's fairly logical. We've also moved quite a bit for that, actually, for that to only be $4 to $5. So that's one of those ones where our pip value, yeah, that should be a fairly high value one. It's just not moving very far. So that's kind of a balance issue that we kind of don't have to worry about once we get into more and more pairs. I'm going to make a detailed video about this coming up soon. There's kind of a starting process to it, and at first it's a little bit up and down, but after you get into about 8 to 10 pairs or more, the more pairs you get into, the more stable it becomes, just because of that cross pair, multi-pair hedging. That just happens naturally, so that's going to be a positive side effect. And in order to manage this, we're just looking for large numbers of drawdown. And anytime we have a large number of drawdown, we can actually best sort this by symbol and see, okay, we've got the $20.84 here on the Euro AUD. We've already added another one there. So now the lowest amount of drawdown, the negative 558, 557, once that number reaches probably about $25 to $30, then I'll probably look to add in again. But otherwise, I'm just going to wait and see if it ever reaches the target. And I'm kind of doing that same strategy, and I'm not really stressing about having most of the account onto one pair. And if it should happen to come to where that margin available starts to get low, I'm just ultimately going to sort by profit, take out the most profitable one, and probably even 2 or 3 that'll free up some margin, and I'll place that as add-ons to the ones that are not doing so well. And if we have an example where I have one where it's kind of close to where I just added in, I'm not going to add any more. I'm just going to wait for it to move. And then the one I had up initially was another one. Let me see if I can track through it. So we have the Euro USD JPY. Sort by symbol, that might help. So we're either sorting by symbol or sorting by profit. So right now, yeah, so I just added the one to the JPY. So if I had one to add here, I'm actually going to wait until it gets much further here, bring that target up, same mechanics there. And if it goes even further, it's not going to be that big of a deal because of these super small position sizes. But let's say I had another one here and price was continuing to go up, I would just simply open up and close out one of my positive positions, and that would give me room to allow that to float even further. What we could even potentially do is just wait for it to show some type of reversal and then ultimately add in and bring that target up even further, and that creates our benefit long term. But the more distance we have between entries, the further we can bring that with us, the deeper we get. So by not adding all of our position into one pair and taking advantage of that, we can actually get a good amount of positions on the market. Like right now I have a 0.2 in the market, and my drawdown is probably drifting about $10 to $20. Some of these were trades that built in before, but since I've added the other ones, I haven't been having such extreme swings from going from like $30 in profit to $50 in drawdown immediately. It's kind of staying very stable, just like you're seeing in this video here. Now, I know that's a lot of positions. A lot are going to be concerned about swap fees, but these are only going to cost me just a couple of dollars a day per position. So I'm really only looking at having maybe about $40 to $45 a month in swap fees, but we're looking to make $10 to $15 per trade. We're going to be closing a few of these. We're going to be closing far more than just a couple of these every month. So ultimately, it's going to take out those swap fees, and we're going to make quite a bit more than what we're paying to trade. I'm also paying the swap and $10 commission on these trades to trade, so that's coming out of the balance as well, plus the swap is part of the unrealized P&L as you start. So we'll go over that in another video, but eventually we've already had 2 reach a target. This one may even reach a target, and once it does, I'm going to probably look to put it into a different position, a different pair. I could even wait and hold that out, but if I'm looking at my management part, all I'm worried about is P&L of each position. They're not too bad. I've already made the adjustments there for those 2 that I showed. And if I have room, so I have $342 of margin available, which is free account drawdown of equity I can handle, and we're still kind of not moving very slow, even though the markets are really on the move. So what I could potentially do is, if one of these closes, I could just open up another position. But if this was a lower number, like say for example I had like 150 or so, I may consider not putting on another position and saving that in case I need to assist one of the others that are not doing so well. So I'm going to stick with the rule of thumb of about 0.01 per 50. If you're looking to be conservative with this, you may want to be at a 0.01 per 75 or 100 or a little more, but just note that you're going to need to get into about 10 pairs. So if this is something you're interested in, though, make sure to subscribe, and you'll get notified once that video comes up. Make sure you turn on notifications too, and you'll get notified once that comes up, and we'll get into detail about how to start this, how to set it up, how it all works, what to plan for, what to expect. But that's just kind of a review of how I'm taking and extending the one pair method that I'm using now, and spreading that across the account to get better risk management and actually get a higher return potential out of it. So it's quite a big improvement over just trying to focus on one pair. And it seems like a lot more to look at, but it's actually not. You're only looking at P&L and your margin available, and making sure you're not really going over your rule of thumb risk, and you should be in pretty good shape with that. And so far that has been holding true. So I'm in the final bits of testing to see how the account manages when you shift around and put multiple positions into other pairs. Eventually I'm going to have to look at sizing up, so a couple more deposits, and I'm going to see how that is affected. But I'm thinking about every $1,000 I'm going to add a 0.01 to the opening of that trade on that pair. But we'll see how it kind of behaves throughout the next couple of weeks, and just kind of feel it out. And once we get ultimately everything going, I'll have the video series going, and we'll have a walkthrough going of that. So I'll just make regular trade posts of that account, and we're also going to continue this series. So make sure you stay tuned, subscribe, leave a like so other people can find it. I really appreciate all the support. And to keep from rambling on, I'm going to wrap things up and see you on the next video.